Good morning, good afternoon, good day. Welcome to my weekend market roundup, 5th June 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They run on the underlying TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system. As usual, I'm starting with a look at the global markets, starting with Australian index AXJO, looking at it using the weekly and 2 daily templates. The middle daily template is the Q standard daily template, and the right hand side daily template is the new Q template I released based on HSA like indicators. Let's look at Australian market and also the other instruments later using this 3 chart template from now onward. Australian index is in an uptrend. In the last webinar, that was on Wednesday, pre-market hours, but Australian market had closed, so we were at this point. And that time I mentioned that AXJO was bullish, but it was too close to the upper boundary. I was not going to take any new long trade. However, if I entered a trade at this point using a support of the yellow direction line, which would be a pullback long trade setup, then I would continue to hold the remaining position after booking partial position profit along the way. If I did that, then I will continue to hold that remaining position. There is no reason to exit that. And one way to let profit run in such a case is to use the Q stop loss on the remaining position. And this may be a good example of how to use the Q stop loss. This is the Q stop loss daily chart template. The magenta dots are used for long trade stops. Let me see if I can remove the cyan dots, which are used for short trade stop. When we enter the trade, which should be at this point using a pullback setup, our stop is just below the recent low, but not right below the low, which would be here. Instead, we use the stop loss or protection signal to place the initial stop. So let me draw again. When we entered the trade as a pullback setup, this should be our entry price, and the stop would be using the protection signal. This protection distance is calculated based on the recent volatility of the stock, and it keeps the stop safe distance away but not too far from the recent low. Then as price went up, somewhere, let's say here, we reached our initial target, which would be when the initial risk distance is covered. So we would book partial profit using GTC order, which would be triggered on this day. At that point, and only after exiting partial position, the guideline, Q guideline, is to move the stop to trailing stop from initial stop. This is initial stop. The guideline is to book partial profit and only then change the stop to trailing stop. And if we did that, our trailing stop is at this point now. If price continues to go up, the magenta dot will continue to go up and we'll keep on raising the trailing stop on the remaining position. Back to the at a glance template. Australian market is bullish but too high in the price level to take new long trade. Let's look at the topics index. Japanese market. The last long entry could be around this bullish headwind, possible reversal time, at which point it also reversed from the watermark support with bullish pressure, giving a box come headwind long trade setup in topics in the daily chart at that time. From there, price has gone up. We would have booked partial profit along the way, and just like in AXJO, we would continue to hold partial position using Q protection signal as the trailing stop. It's reasonable distance away from the recent low, so we are not going to initiate new long trade now. When could we initiate a long trade? After the box come headwind long trade setup? That would be on this Wednesday. Wednesday gave a bullish flow candle in the daily chart, and the weekly was already bullish from 1 week ago. So it gave a go with flow trend following long trade setup. If we missed the headwind come box long trade at the very low, we could initiate a long position in topics on this day using go with flow trend following setup. That's how the Q trade setups are designed for different market conditions. A box setup comes at double top, double bottom, or in a sideways market. In this case, it was also an undercut and rally. Headwind setup comes when a stock is reversing from a downtrend to uptrend. That's bullish headwind. And if we missed one of those reversal trade setups, box in this case, headwind in this case, and if the instrument continues to go up, it will inevitably, almost always, give us a go with flow long trade setup sooner or later. It is very rare that it will just keep on moving up from a box or headwind long setup and never give us a go with flow straight setup. That is almost never it happens like that. So we don't have to always take a reversal trade setup if we don't want to. I'm comfortable taking box headwind bounce setups also, but if somebody doesn't want to take reversal setups at the very low, that's fine. Sooner or later Q systems will give a trend following go with flow setup, and that will be the first long entry opportunity after reversal. So that's also not too late, and the stop would be here in this case if we entered on Wednesday. In either case, whether we entered as a box headwind or as a go with flow setup, we would continue to hold at least partial position. There is no reason to enter new trade now. Over longer period, it is not as bullish as Australian market, but for short-term trading, swing trading, average holding period about 5 days, we are not going to look for short trade right now. It's in an uptrend. China's market CSI 300 index. The weekly backdrop color is bullish. All the trend lines are holding. However, the weekly candle shape is indecisive. In the last few webinars, when price was already near upper boundary and it was displaying the indecision candles at the top, I suggested not taking new long trades. That was useful. Prices come back little bit. Now it is at the trend line support. Friday's candle shape is mixed. Color is also neutral. It is in an uptrend for short-term trading. Most of these webinars, live webinars, are meant for swing trading. Q systems can be used for longer term investing and for day trading also, but I don't focus on them in the live webinars. Usually I don't. So for short term trading purposes, CSI 300 doesn't have any trade at the right edge. When could be the last trade? Last trade could be, as I mentioned in earlier webinars, as a bounce setup from the daily as well as weekly trend lines. If we took those trades, partial profit could be booked and you probably are holding partial position, especially if you entered here. If you entered here, you would book partial profit when the risk distance was covered and you would get stopped out on the remaining position with a smaller profit using trailing stop. Now there is no trade in CSI 300 for short-term trading. Let's look at FTSE index. UK market gradually going up. In the daily chart, it has trendline support. However, the weekly is not displaying much strength. Bull release, sorry, red color has to be bear release, then indecision at the top, indecision at the top. Backdrop color still magenta, weekly shape indecisive. It's not giving enough confidence to take long trade. Interesting, isn't it? I looked at multiple global markets and I'm doing it live. Incidentally, the first one, Australian market, is the strongest. After that came Japanese and Chinese market, still overall in an uptrend for swing trading purposes, but not as strong as Australian market. And FTSE index, that's the last one I'm looking at, that is even weaker. The weekly is not giving any confidence to take long trade, though it is in an uptrend in the daily chart. Lastly, we look at the Indian market index, Nifty 50, and that is strong. I know that because I am trading in that market actively, somewhat actively, not as actively as in the USA market. Nifty 50 in India made a new all-time high this week despite the huge COVID crisis that is there right now. Made a new all-time high. I have few long positions, but right now it is above upper boundary. It's overbought, shown by the stretch band indicator for many days. So I'm not going to look for new long trades, not in Nifty 50 itself. However, there may be industries that were weak earlier. I'm happy to buy in them if I see them improving now. The same situation that is happening in the USA market. Let's look at USA market starting with S&P 500 ETF SPY. Interestingly, I see just now that Friday's candle shape and color both are bullish. The weekly color is bullish, however, weekly backdrop color is still remaining magenta. In spite of price not going down for 4 weeks in a row, gradually going up for 3 weeks in a row, backdrop color is still remaining magenta and I see it's continuing show to show multiple indecision at the top, bearish headwind, indecision at the top, and again indecision at the top this week. Not giving enough confidence to buy in the USA market as well. Though it made a new all-time high on a touching basis. I think on Friday it made a new all-time high, though at the close it was slightly below the previous all-time high here. But the weekly certainly not giving that much confidence. Whereas if I look at Nasdaq ETF QQQ, that is not far from the previous all-time high, but not as close as SPY is. In that way, it is weaker than SPY. However, if I look at the daily, weekly, the immediate last candles, then it is looking more bullish, because here, unlike SPY, the weekly shape and color both are bullish, and I don't see so many indecision or bear release or bearish headwind at the right edge. It may run some distance up from here, make a new all-time high, and then we may have more concern. But right now, as of Friday's close, I will be happier to take a long position in QQQ than SPY. Looking at the weekly, daily, the backdrop and the flow color. In fact, in a way, it is giving a trend following, go with flow, long trade setup. That's nice, isn't it? Remember in the last webinar also, actually in last webinar, I mentioned that the weakness that we saw, the relative weakness in Nasdaq as a whole relative to NYSE was starting to evaporate, go away, and that came true in the last webinar when the relative weakness was even less, and I haven't seen this week. Maybe this week the relative weakness for Nasdaq disappeared even more. At least looking at QQQ, it seems like that. We'll look at the market breadth study shortly. For swing trading purpose, I will be happier to buy QQQ as of Friday's close than SPY. What about DIA? DIA is similar to SPY. For few reasons, I'm not going to buy DIA as of Friday's close. One is there is a trend line resistance in daily just above closing price, and the weekly color is still magenta, bearish. In fact, if I look back, let's look back to SPY one more time. I noticed one thing. SPY has no kahuna. Kahuna is one of the momentum indicators in the new template. DIA has no kahuna. No kahuna. But QQQ, not only the weekly backdrop was bullish, it caught my eye, it has a kahuna as well. In the daily chart, on top of that, it has a Mobo and kahuna, both, and the biggest move in last 1 week. So that is also a signal, more bullish signal in QQQ than in DIA SPY. From Q side, the backdrop color is bullish in QQQ, but not so in DIA and SPY. And if I look at Russell 2000 ETF, again, like DIA, it is right at trendline resistance. On top of that, it has two indecision at the top in a row, Thursday, Friday, and just at trendline resistance in daily. Not only that, also at trendline resistance in weekly. So I'm not going to look for a buy setup in IWM. Interesting, isn't it? Though in recent weeks, QQQ was weaker as of Friday's close. If I had to buy any of the market ETFs, I would choose QQQ, not the others. And That is very easy to decide from this color coding and the trend line supports and resistances. Now, if I look back, I remember in the last webinar, Wednesday's webinar, pre-market, so I was making my decision based on Tuesday's close, this candle's close. And I remember mentioning that at that time, if I chose to short any of the instruments, I'd look to short IWM, looking for a reversal from trend line resistance in both weekly daily. And I also mentioned because there was no Q swing short trade setup, if I took such a trade, I would initiate that using Q fine tune chart. I in fact took a trade next day, that is on Wednesday. This was Wednesday. Initially, price tried to go above the trend line resistance, and if I switch to the fine tune chart, I want to show you that when it came below early range low, it had come below the trend line resistance. And for that, let me use trade station. Let's look at IWM. I'm using Q Elite on trade station, and I'm syncing up the daily, weekly, and the intraday chart. Let me change it to intraday fine tune or precision entry chart template. In the morning session, I use 5 minutes. Let's look up the trend line resistance price level on Wednesday. That was at 228.5. I'm reading it from the scale here, right hand side scale, 228.5. So if I go to the intraday fine tune chart on Wednesday, this was Wednesday. Let me align. Okay, 228.5. 228.5 is somewhere here, 228.5. I drew the line there, here, 228.5, this level. So price gapped up at the open, and immediately after that it reversed and went below the daily trend line resistance. So it was a very sharp false upside breakout, and I was ready to short it. I might not have shorted exactly at this point, but somewhere here I had shorted IWM. I had used put options. I don't remember whether naked put or put vertical, probably naked put. I shorted it, and though price didn't go down much, in fact close inside early range, but I had no reason to exit the trade because my intraday stop would be above early range high here, and the stop was not hit. Once the day closed, my stop would be decided based on daily chart, that would be above the daily trend line resistance. But next day price dropped sharply. I had a nice profit because when it dropped sharply, I had naked options, the volatility was high, my profit was high, and I saw the profit was eroding. And remember, it was not a real swing trade because there was no Q swing trade setup. I took a fast trade using fine tune chart, using the trend line resistance in weekly daily, and when it started to go up, I booked my profit. Not a big profit, but I didn't want to risk it also because it was not a swing trade setup. I would have been happier if on Wednesday it broke below early range low and dropped sharply like it did on Thursday. If it did that, I would have closed the trade, at least enough number of lots to get my money back on Wednesday itself. But it didn't happen on Wednesday, it didn't drop. I was holding the trade, so the next day on Thursday, when I got a chance, I got a profit and it was starting to erode, I exited it. So I planned that trade and I mentioned the trade before the market closed. Once the market opened, I took the trade as per plan. My risk was very small using 5-minute interval, and I held on to the trade. So my entry would have been somewhere just below the trend line resistance. My risk would be very narrow, very narrow. So narrow I cannot even draw on this chart properly. This is a daily interval. My stop was on 5-minute interval, and at the lowest point my profit was much higher relative to the risk. But along the way, as it started to go up, I would have exited the trade somewhere here. So that was a fast trade, but not difficult trade, because I was ready with the trade and I mentioned it in the pre-market webinar. For the same reason that I took the short trade, I am not going to buy IWM now. The reason is it is near trendline resistance. Will I short it now? If on Monday it tries to go above the trendline resistance again, which is there in weekly still, and reverses again, I don't mind shorting it again. However, today the situation is little bit different because I have an idea to take a bullish trade. If I wanted to take a trade in market ETFs in QQQ, and if QQQ keeps on going up, then IWM may not come down much. So that may temper my willingness to short IWM right now. It is likely that SPY will also go up, make a new all-time high. If it has to drop, maybe it will drop after that. And QQ may also make a new all-time high. It looks like it's going to do that. But I will not trade based on what it looks like. I'll trade based on Q signals and setups, just like I did IWM. So if I see Monday it's going above trendline resistance, reversing, and the other market ETFs are reversing at the same time, that I keep an eye on one of the monitors where I look at the market ETFs and the market internals, new high, low, advanced decline, and the tickers for the Nasdaq Composite, NYSE Composite, and the 4 major indices: Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500. I'll keep an eye on it. If I see IWM is reversing from trendline resistance and DIA QQQ SPY at minimum not going up, maybe not coming down, but at least not going up, then I may consider shorting IWM again using fine-tuned chart. But if I see DIA QQQ SPY going up, or some of them are going up, some of them sideways, only IWM is dropping, then I may not be happy to short. Now when I came here, let's look at this chart on Friday. Before looking at the intraday advanced decline, let's review the daily chart quickly once again. IWM, if you just look at Friday's candle, it is near trendline resistance, but Friday's candle itself is indecisive in IWM. DIA, Friday's candle may be near trendline resistance, yes, but the candle itself is bullish in DIA. SPY, maybe near watermark resistance, maybe the not maybe, of course, it's near watermark resistance. Weekly backdrop is bearish. Weekly has indecision at the top, but Friday's candle itself is bullish. And QQQ, certainly it's bullish, plus it has a kahuna. When we look at that, all the candle shapes are bullish for the 4 market ETFs. IWM the least bullish, maybe indecisive, but QQQ, SPY, DIA are pretty bullish as far as Friday's candle is concerned. Now, if you look at the market breadth, you will not get that confidence of bullishness, at least from certain angles. If we look at Nasdaq advanced decline, it is bullish. NYSE advanced decline, bullish. It did come down a lot and recovered later in the day. But look at Russell 2000. It declined right after the open, and though IWM itself recovered, advanced decline didn't recover. Advanced decline just stayed around zero, didn't recover. And IWM up-down volume did worse. It turned negative. Now IWM has 2000 stocks. It's very broad index, the broadest of the four that are being plotted here. Broadest of the four major indices, not the composites. The broadest one came down. That's not giving the confidence that is coming from looking at the market ETF's daily candles as far as broad market is concerned. However, if you see advanced decline for Dow Jones, Nasdaq 100, S&P 500, and also up down volume of the same, they are quite bullish, unlike Russell 2000. That is another reason that if I wanted to short any market ETF on Monday, my preference is IWM. Even looking at the market breadth, looking at the intraday chart, the same conclusion that I reached when I looked at the daily weekly, but that was from a different angle, from trendline resistance angle, and here from market internals angle. Advanced decline up down volume move as of Friday. If I wanted to short any of the market ETFs on Monday, I would choose IWM. Also, this picture shows that probably the mega caps or larger cap stocks did better. The broad market did not do so well. In fact, NYSE, if you see NYSE up down volume was not anywhere as good as Nasdaq composite as a whole. I am doing it live, but remember I mentioned earlier, looking at QQQ being more bullish, that probably the relative weakness of Nasdaq disappeared more. We'll look at the market breadth shortly, but here I can see that at least in terms of up down volume on Friday, Nasdaq was much stronger than NYSE. The more you study these charts day after day, the more you start to have a feeling by looking at one side of Q systems, and then when you open the other aspects of Q systems, you see your feeling is being confirmed. That means you are being more and more automatic and getting used to the system, just like driving a car. You don't have to think about acceleration, gear if you have them in your cars nowadays. Manual gears, you don't think about them, you just drive. The more you look at the charts, you start to have an understanding, looking at it day after day, that Nasdaq is improving, then Q is looking bullish. Probably Nasdaq as a whole also improved. Now I see Nasdaq up down volume improved relative to NYSE, and now may be the time to look at the market breadth. But let's look at the composites first to confirm or invalidate the assumption that Nasdaq's relative weakness is disappearing more or not. It seems so. I think I ran market breadth already. Let's check it. Changing the template to daily and check the last date, 4th June. Yes, so I ran it already. Now if I look at the percentage of stocks in Nasdaq above 50-day moving average, the yellow line, I started mentioning about the relative weakness disappearing right from the bottom when it went up and crossed above the average line. In the next webinar on Wednesday, it strengthened further, and that strength continued, it improved further. Whereas NYSE is continuing to move sideways. It never weakened, but the relative weakness of Nasdaq lessened, decreased. The other relative weakness in Nasdaq was from the percentage of stocks making new high. That will take time to change. Overall, NYSE is still strong. The weakness seen in percentage of stocks above 50 MA, relative weakness in Nasdaq decreased further. As in the previous webinars, we saw the advanced decline up-down volume remained bullish in both of them, showing that the market strength is quite broad. It's not only from the mega cap stocks, the advanced decline up-down volume shows market strength is quite broad, very robust internals, because these are entire exchanges for Nasdaq and NYSE. Now let's look at the total view to see if there is any distribution count at the right edge. I don't think so, but let's look it up. No. And because I'm looking at the charts every day, if you are doing that, you will also start to have a feeling. And I'm looking at the intraday charts also on Q Elite. So I had a feeling there would not be any distribution count, and of course there is none. No distribution count in recent days at all. This is what I'm mentioning for quite a few weeks, because there is no distribution count at all. Forget about having distribution count of 3, 2 or more. I'm not expecting market to drop sharply and suddenly. In fact, the hedges that I am taking, or if I am taking any short trade, they are not giving me profit. They are reducing in time value. I am not losing money, but I am not making money as well. My profit percentage on the TestyWorks account that I share sometimes is still stuck at 30%, which was the same level that I achieved at the end of March. But at least I am protecting that profit, it didn't go down. Market breadth is bullish. Market ETFs are bullish. Now let's look at the last part of the market breadth, mega caps, top 20. Mega cap top 20, Friday's candle color is bullish, but it is just near the trendline resistance, has a trendline support inside a triangle, maybe breaking out of the triangle. Technically, it actually broke out of the triangle on Friday. Weekly backdrop is bearish, shape is bullish. There are not so many indecision or bear release nearby as was in SPY. So looking at that and the bullish shape in weekly, possible breakout in daily, it seems more likely that mega caps will go up from here. Of course, there is the announcement of the global tax treaty agreement among the major countries. We'll see if that affects the mega caps price move next week. That's a possible major news. Sometimes possible major news have no impact on the market at all. If I ignore that news, looking at the weekly daily, I will expect price to go up from here. There is no trade setup, of course. Even if I could buy mega cap top 20, I wouldn't buy it. There is no Q long trade setup. Now let's look at other angles of the market. So far we have seen bullish market. If we look at the sector industry stock advance decline, if you checked QH throughout the day, you would know it was not as bullish, nowhere near as bullish as it is now near at the end, at the close of Friday. During the day, it was weaker, much weaker. It was mostly red. at the close it turned bullish. 73% of sectors are up, 60% of industry, 62% of stocks. Closing is more important than opening or what happened during the day for swing trading purpose. So closing is bullish. That also shows, especially when it turned red and from there it turned significantly green, it seems price will continue there. Usually that happens. Whatever happens at the close, if there is a reversal from bearishness to bullishness on Friday, usually that continues on Monday. We'll see if that happens again. That is the usual trend. And if we look at the buckets, the percentage of stocks in the most extreme bucket is just 6.8%. Nowhere near 30% or so. So it has a long way to go before we think that a pullback is likely. If we now look at the very useful 1 month to 1 day sector industry stock advanced decline breadth, that is bullish. Once again, the daily weekly turned bearish only to turn bullish again. Not overwhelmingly bullish, but still bullish. Green portions are bigger than red portions. That is true for 5-day period, 10-day period, and 1 month had been bullish for a long time. Overall, this picture we have to say is bullish. So not only market breadth is bullish, not only market ETFs are bullish overall, though there is no long trade setup other than in QQQ. Market sector industry stock advanced decline breadth is also bullish. Last view of the market is from the technical breadth side. First, a look at the weekly picture. Technical breadth, all signals bullish. Strength signals bullish. Trend continuation bullish. Trend reversal balanced. So overall, we have to say this is a bullish picture. Are there large number of bearish headwinds? No. So there is no concern from that angle. We are not seeing an unusual number of bearish headwinds. Though SPY is near, almost at all-time high. The other market ETFs are not very far from a new all-time high. There are not many bearish headwinds, so there is no concern from that angle. And the overall technical breadth weekly period is bullish. And on Friday itself, I expect it to be bullish because I saw QH sector industry stock advanced decline was bullish also. All signals 77% bullish on Friday. Strength signal very strong, 93% bullish. Trend continuation 72%. Trend reversal is also bullish. So the daily period on Friday is even stronger than the weekly period. In the weekly period, the reversal signals were balanced between bears and bulls, but here reversals are also bullish. So everything in the daily interval is bullish on Friday from the technical breadth. That usually says that Monday will also be an up day. The percentage of stocks giving bullish signal from price extreme high is unusually high. So that is the only warning or cautionary signal to keep in mind. There is no cautionary signal from bearish headwind. There is no cautionary signal from bucket analysis, but there is a cautionary signal from technical breadth that the bullish signals that are coming, 58, almost 60% of them are coming from stocks that are already at price extreme high. That's a cautionary signal, but we'll see if it is because of the USA market coming out from the COVID impact or not. That may be one reason, but still we will not try to justify it. We'll just remember and keep this in mind as a cautionary signal. Just one cautionary signal, everything else is bullish, and this is cautionary signal of being overheated, not a bearish signal. Overall, the market looks bullish. from every angle. Here I shared the IWM trade that I discussed in the last webinar. I booked profit in that. Let's look at some other stocks I had shared earlier. One is Edu, Chinese education stock, and I'm using Q Elite now. I keep on switching between Q Elite on TradeStation and Q Global on MetaStock. I shared the stock, but not that it was great fundamentally. Not my usual trade. I like to buy stocks where all forces are aligned. If I relook at Edu's, I think Edu is the Reuters symbol also. The fundamentals, we'll see that it is not that great. Not the best Q trades that I take. If I look at the industry, the industry is improving. On Friday was also up day, but I shared it a few days earlier, and this might be one reason why I was willing to buy the stock. The education services industry was in fact the worst performer over 12-month period. Then it started very slowly improving again, became the worst performer over 2-month period. But see, over one day, Friday, it is stronger, much stronger, and the improvement is happening over several days from 10-day onward. So from last 2 weeks or so, it is starting to improve. Somewhere here I shared the trade idea only a couple of days ago. That was one reason I looked at the stock, but not that its fundamentals were great. I mentioned in the forum post or Twitter post, wherever I shared it, fundamentals were not great. I mentioned it. The valuation not undervalued, not overvalued, but not undervalued. Earnings growth very small and reducing, not improving. So it was not one of the stronger Q trades that I shared, but I did share it, and I tried to catch the bottom using a bounce trade setup, that is a Q trade setup which we are allowed to take after a sharp and sudden drop. Price comes to a pre-existing support and a close above previous day's close. That are the only requirements. So bounce trade setup was confirmed on this day, and I took a long position. My stop was below recent low. Now I didn't put a stop, but I was ready to exit the trade if the price closed below. Luckily I didn't put a close. It shook out many traders on this day. The low of this candle was much lower than the low of this large bearish candle, and it recovered very nicely, closed above the same watermark level that I used as my bounce trade support. That was on Thursday. Very nice recovery from the lows, shakeout probably. And Friday, another bullish shape candle with long lower tail and an indecision at the bottom candle. So price may go up from here. I'll continue to hold that stock if that happens. On the other hand, if it starts to go down, goes below Friday's close, I may take a loss and close the trade. This is not fundamentally strong, nowhere near that. So this is not one of the stocks that I'm accumulating and planning to hold for longer time. If it goes below Friday's close, I may consider closing the trade, especially if it closes below Friday's close on a closing basis. I don't want to get stopped out by a whipsaw like happened on Thursday and to a lesser extent on Friday also. low price stocks and probably less liquid stocks that are already dropping has a tendency to stop out traders at the bottom. I'll keep an eye on it, and if I have to close it below Friday's closing price, I'll close it, take a small loss. Now there is one stock that I don't remember if I shared it. Let's check it out. TIGR. Is it TIGR? Let's see. Yes, TIGR. Yes, I shared it 10 days ago and I took a long position at that time. Some of my trades I share at the same time that I enter, but these are not meant as stock advice. It's just how I'm using the Q systems for educational purposes. But I analyze them, sometimes look back, and whether they stopped out or made profit is not a concern for me. It is a concern if I am not following a logic to enter the trades or share the ideas. And sharing keeps me more disciplined also. Let's look at TIGR. I shared it on May 26, 10 days ago. What was my basis of sharing this? Its industry, investment banking and brokerage jumped in relative score. I just look at the magnitude, but if you wanted to read the numbers, it jumped from 23 to 69. The alternate industry also jumped in relative score, and the actual percentage move of the industry, it was coming down negative over 5 days, 2 days, 1 day. And when I shared it in real time, as of that day, the industry was up. So it was a turnaround that we could see both from the score and the actual percentage move of the industry. Now, this was not again a fundamentally strong stock. Incidentally, Edu was a Chinese stock and TIGR was also a Chinese stock. They're listed in the USA, but it's a Chinese business. It's overvalued. Earnings growth, the data we have is not encouraging as of the time I shared it. But what were the encouraging things? The industry was encouraging. Industry was improving, turnaround, and it had a short squeeze potential. And on that day, not only relatively the industry was strong, 90% of the PR stocks were strong. Another thing encouraging for this stock was that steadily it was going up over 10 days, 5 days, 2 days, 1 day, and even on that day in real time everything was green, so it was steadily going up. TIGR, and I shared the chart. I think yes, this is a setup that was also very interesting. After a sizable drop and after forming a triangle pattern trying to stop out weak hands by the long lower tail weekly candle, after that a narrow body candle, and then we had a very bullish body candle breaking out from triangle in weekly and daily, coming out from support. When I shared it, I think I mentioned it was already a little bit up, but that was the time one could buy if one was waiting for the stock to regain the yellow direction line. One day earlier one would not do that because it had an upper tail. Just when price was going above the high of that upper tail candle, one could buy it right here. It had a bullish flow and 2 days of bullish pressure in a low row. High volume also. So the charts were looking good weekly, daily, and I shared it. Let's look at TIGR. That was 10 days ago. If I look at TIGR now, I shared it right on this day. One could enter as price was going above the high of the long tail candle, and if one was using the yellow line regaining as a basis, stop could be just below the yellow line, but it never even approached stop. By the high of Friday, I think the reward risk was more than 2. So one would certainly book, if one is following Q guideline, one would certainly book at least partial profit in the trade. The reward risk was more than 2 by the high of the Friday. No point in not booking profit. Why one would not wait? Because fundamentally it was not that strong. No point. It's not a high growth stock. It's not a great undervalued stock, not a well known stock like Apple. When the profit was so much more relative to risk, one would, at least I would certainly book partial profit. At the same time, no reason to exit full trade position also. Let's check its industry now. If the industry was weakening on Friday, one could consider exiting full position. Let's look at the stock TIGR. You will see its fundamentals were not that great, right? And I shared it in the post also 10 days ago. Fundamentals are not great. Fundamentals don't change every day, so we can see from vital fundamentals not great. Friday industry not so good, but let's look at the relative score. By the way, Friday also it moved up by 7%. The relative score came down. And if I look at the industry rotation, it's weakened. So that would be a reason, certainly a reason to book at least a partial position. Certainly. And that was, I think once again I shared an analysis that turned out to be very profitable. Usually my trade ideas work quite well, as anybody who is following the trades on my forum or Twitter knows. However, I don't suggest just taking the trades. I think none of the people who look at my site, they don't trade because I am sharing it. I expect them to look at their own systems, own techniques, own approach and decide if the trade is right for them. It's working well for me. Now, I wanted to mention one more thing. Why did I share a trade like this? Edu, I just now talked about Edu because I took a trade that was extreme reversal bounce trade, and I read a little bit about Edu, a Chinese education services company. The COVID was affecting business everywhere, and I thought that it may start to recover from that, and Edu may also benefit. So I took a chance on the trade based on a Q trade setup. That was my reasoning for Edu. Edu's fundamentals were in fact better than TIGR. TIGR's fundamental is not good at all. No revenue growth, no earnings growth. But Edu in fact had positive earnings growth. Not great, but had positive earnings growth. So Edu's fundamentals were better. TIGR, TIGR, not good at all. Why did I still share it and buy it? There was another reason. That is not part of Q analysis as such, but I shared with traders earlier. When I look at stocks that I don't know of, like TIGR or even Edu, I like to look at them through Zenith. So I looked at TIGR, and as part of my analysis, I looked at the event chart I shared in a forum post earlier, and I also explained in video how I use it. So I tend to look at the events taking place in a stock as it is moving up or moving down, and this Zenith facility allows me to put my cursor anywhere and see what were the news. Okay, rather what were the news, if any, that was happening when the stock turned around at the bottom, or what were the news that happened when it turned around at the top. So I could position my cursor anywhere and you will see. Now it is showing me the news from 17th February, not as of today. So when I shared the idea 10 days ago, somewhere here, there was some news here that they had very high subscriber growth. This is a brokerage or investment kind of business that caters to Chinese individuals who are living abroad. They are expected to be overall more wealthy than the people, I assume, than living in China and going abroad. They may be more wealthy. They cater to them. They had high earnings, high subscriber growth, if I remember, if I'm not mixing up with any other stock. So that was another reason for me to buy it right on this day using the Q charts as I shared. And again, that worked out very well. TIGR worked out very well, gave me at least 2:1 reward risk ratio. I have booked at least a partial profit in the trade. These two were a little bit unusual, and I shared the rationale of me taking the trades, and also why did I share Edu and TIGR. Another stock that I shared, also not an usual trade that I share, but I did it recently. That was on an on a recent IPO. That was in STEM, STEM. And if you look at the chart, once again, it was little bit unusual for that reason. One, it was relatively recent IPO, and also like the TIGR stock, it was little bit unusual because it was already some distance away from the recent low. As I mentioned in the post, you can see after earnings it tried to go down, then went up, and it just regained the yellow direction line. But there was another reason I took the IPO. I came to know of it from a, a very good trader actually. She has a Skype group. I got to know it from that Skype group. But of course I look at my systems to decide. And I liked the business, and I looked at Zenith to investigate more about the stock. I didn't know about the stock, and when I shared it, I took a long position in this stock also, STEM. And let's look at STEM today. It was recent IPO, so there was not much need to look at its fundamentals. See, when I shared it, when it regained the yellow direction line, since then it has steadily gone up. Steadily gone up. When did I share it? Let's check it out again. The date was 10 days ago also, May 26. So May 26 would be here. So on this day it regained the yellow direction line. Next day I entered the long position. In this case I took a call option. I like the stock. I took a little bit longer, I think 2 months or so call option. I like the business IPO, recent IPO business. So I just bought call option, and by Friday I had more than 100% profit. So as is my habit, I closed enough lots to make it risk free. I am holding now some call options. They are free, and the weekly daily both looking very good. So the three unusual trades that I shared, they all worked out quite well. TIGR, STEM, Edu is still working. I have not booked any profit or loss. It may be little bit in a loss, but of course my STEM trade and TIGR trade made up for more than that loss. But anyway, I'm waiting for Edu to see what happens. Still holding the trade. These trades are working overall quite well. Now I am already at 1 hour point, but let me spend 2 more minutes. I don't know, I will find 2 or 5 minutes I can find good trade or not, because the market ETFs other than QQQ are not showing me any swing trade. So let's see what I'm going to do. I'm going to start with the weekly interval. I'm using the latest released Q systems. I'm going to look at the stocks that are, let's say, at which one should I look at? Let's look at bounce, weekly bounce. 10 stocks I can see. I put my cursor on the symbol column header, or I could drag and select all the stocks in any way I want, and I want to look up their daily signal. So I click the lookup finder button. I can see out of those weekly bounce, bounce from weekly and daily, I see there are two breakouts. So let me look at them. Let's make sure all global charts are closed. So these are bounce from weekly trendline support, breakout from daily trendline resistance. Okay, this stock is flat. Maybe it's an acquisition or something. Close that. Let's look at this one, INGN. Look at it using the 3 chart weekly daily template. Support from weekly, not only support, bounce from weekly and breakout from daily. It had support from daily trendline support on Thursday, which had a bull release signal. That could be a possible buy point with very narrow stop. Now we have a possible breakout in daily and bounce in weekly. And if we look at the signals, we have also bullish pressure, bullish U-turn on Friday, high volume in daily, weekly both. Weekly has nice support. And if we look at the new signals, we had red candle low. Sorry, what I am saying. We had green candle low. If I hover the mouse on the indicator, it says failed extreme. So green color is green candle low. We had 2 in a row. We had one ISOL failure, but that is bullish. That was some time ago. On Friday, we have PSAR reversal, MOBO, viable gap up, and biggest move in 3 months. As I mentioned in the last webinar when I was discussing the new indicators, the biggest move in 3 months does not have to be extended. Maybe that is the beginning of a move, and we have a BGU, we have a breakout from daily. So this may be a possible candidate, INGN. If one is buying it, stop maybe just below the BGU candles low, or in this case one may put below yellow line. Depending on sizing, one may put below the trend line support also. The further away one puts the stop, the number of shares may be adjusted to keep the risk same. Technically, it may be taken. There are multiple bullish signals in weekly, daily, both the templates. Now let's look at its fundamentals. We found it from Finder, bottom up. How did we find it? Looked at weekly signals, weekly overall period bullish, looked at bullish weekly signals. We looked at stocks bouncing up from weekly trendline support, looked at their daily signals. Initially just looked for the breakout setups and we found one, INGN. Now let's carry out a peer analysis for INGN using Cube Vital, connecting with Refinitiv. While it is doing that, I want to check its industry, not waiting for it. INGN. Healthcare equipment. I'm accumulating some healthcare stocks at the low price, as you know. INGN is not at a very low price, but let's check the healthcare equipment industry while it is connecting with Definitive to get the fundamental scorecard. Healthcare equipment. So why don't I go back to the home page of Edge, start with top down, go to the sectors first, look at healthcare sector. It was weaker earlier, it is improving in relative score and it has acceleration over 2 days. That is healthcare sector. Let's look at the healthcare industries. I'm looking for healthcare equipment. This is the industry. That industry is certainly bullish now. It has improved a lot relative to what it was earlier. Strong at the right edge, in the left edge in this case, which is right edge on the chart over 1 day period, and it is accelerating. So the industry allows me to buy, no doubt about it. Let's go back to Vital. It is still retrieving the data. That's fine. Once the data is okay, was it in S&P 500? Let's look it up. If we go to healthcare equipment stocks in Q Edge, that has all the S&P 1500 stocks. Let's see if INGN is here. It's actually here. Okay. Okay. It is a 1-star candidate. It has high and accelerating earnings growth in the last quarter. Valuation not overvalued yet. Medium valued. Great earnings quality, short squeeze potential. So it is a 1-star fundamental candidate that allows me to buy the stock. I don't have to wait in this case for Vital to connect with Refinitiv. So we found a possible buy setup, breakout in daily, viable cap up in daily and bounce in weekly with 1-star candidate, medium valuation, high earnings growth, accelerating earnings growth in a strong industry. That is how you may use signals from different Q systems, Edge, Vital, Global, Elite together to find 360-degree trades. Beyond 1 hour point, let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session that will most likely be on Wednesday, 8 a.m. Eastern Standard Time. I'll announce it on my Twitter handle, and if you're subscribing to YouTube channel, you'll get notification from there as well. Thanks once again. Have a great weekend. Keep safe, and as I say, no reason not to do that, as the examples on my forum shows that I share almost always before knowing the result. If I can do it, most of you, if not all of, most of you are in the US time zone. I think should be easier for you to do that if I can do it from Thailand time zone. No reason not to do that. Trade profitably. Thank you.